Boy, oh boy, it's already that time of day again here, folks. Time to get back to work. Great to be back here with you guys on this video tonight. It's time to get back to work, though. It's, of course, Thursday afternoon. It is November the 14th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, great to have you here with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys and gals find the best levels of support and resistance, the best entries and exits for tomorrow, and most importantly, how to avoid those common traps waiting for you on Friday. That's tomorrow morning's trading session. And we have a lot to cover in tonight's video. First of all, tomorrow's a Friday. We get some big news. We get some possible rollover. We'll take a look at the calendar and make sure you know exactly where to budget your time and where the best setups will probably come tomorrow morning. Then we'll grab some charts. We got a lot to cover in the charts tonight. Oil, S&P, Nasdaq, and gold. But I'm going to jump in first to the oil market, the black gold, the Texas tea, because boy, oh boy, oil got hammered this afternoon. Big move down on the oil. But if you were watching last night's newsletter, this is exactly where we think buyers are waiting on the oil. I've got two real important chart patterns that are both telling me it might be time to be a buyer on oil. But all that bearish momentum, how do we buy a market that's tumbling like that? Well, let's talk about it. Let's grab that chart tonight and let's get this video going here for our nightly newsletter. Now, the first thing I see here on oil is there are really three components that we want to pay attention to right now. One of them is this spike in channel. We go up, we pull back, we go up, we pull back. You'll notice that channel. Now, spike in channels are really common patterns, and we'll talk more details on a spike in channel as we dig into this video tonight. But the most important thing that we always talk about on a spike in channel is the base of that channel, right? Right where the channel runs into that spike is usually where the best buy setups are going to come. That's a big clue, and it tells me might not be a good place to be a seller down here, and I should look to be a buyer as we go. But then you've got the second big clue, and this is the one we talked about last night on the newsletter, that trading range. Now, ranges are really powerful clues because they tell me to buy low, sell high, avoid the middle. But most importantly, look what we have here. We have a pendulum swing. The amount of the move above the range is also now the amount of the move below the range. In a trending market, we use measured moves. In a range-bound environment, we use the pendulum swing. The amount of the move above is the amount of the move below. And look where we are right now. I mean, that is spooky, right? How tight we are to that pendulum swing. That's the second clue now that says, you know what? We might be better off looking for a buy than trying to be a seller. But then there's the third clue. And the third clue, as I mentioned earlier, is all of this bearish momentum. How on earth can I trust a buy setup if I'm buying right into that level of resistance? I know I want to be a buyer here. I don't want to sell into this area because of all the different clues we've seen so far. But I worry that if I try to get too aggressive here, I'm going to get stopped out and make that run going lower. So tonight, what I want to talk about here is I want to talk about three different scenarios. Two of them being reversals off of the low, one of them being a continuation, because I really see a lot of easy profit being made as this market goes all the way back up to retest those highs on a short covering rally, but we've got to be careful. So if you're looking to be a buyer like I am on oil, I've got three different things I'm watching for tomorrow, and we're going to slice and dice all those three into small details tonight on this video. So make sure you stay tuned for more on that. Over on the S&P is not the prettiest chart in the world, but it is a range-bound market. Big clue on the S&P is the bull move up into that trading range. Now, we talked about a range-bound market on the first chart of crude oil. What do we know about a range-bound market? We know the range-bound market says buy low, It says sell high, and we also know to use that pendulum swing. Look at that pendulum swing. The amount of the move below the range is the amount of the move above the range. We have a lot of reasons to believe this market has its eyes on that 3104, 3105 area, but look where we are right now. We're right at the top of that trading range. This is a horrible place to be trying to be a buyer right now. I definitely don't want to be too aggressive selling this because look at that bullishness we see coming off of this. So a lot like on oil, how do I buy this market when we're into a major level of resistance? I'm looking for a couple key patterns. In fact, there are 3 key patterns I'm looking for here on the S&P. One's going to be a nice deep pullback. The other 2, though, are going to be a breakout going higher. We're going to talk about those details tonight on this S&P, so you definitely want to stay tuned on the E-mini. Don't go trying to buy this top just yet, right? Let me kind of walk you through here some different scenarios to look for on the S&P. Then you get the Nasdaq. The Nasdaq is in a very similar situation to the S&P. Overall, it's a range. And that range, of course, tells us to buy low. It tells me to sell high. It also tells me the amount of the move underneath that range is lined up now for a nice big rally higher here, possibly to new all-time highs at that 83.15 level for tomorrow. We can definitely see a nice big bull momentum right now, can't we? There's no doubt about that. The bulls definitely have the wind at their back. I certainly don't want to try to sell this market, although I will talk about my favorite reversal pattern tonight on the video. I've got, again, like on the S&P, I've got 3 different scenarios I'm watching for right now. I'd love to see a pullback to low of that hidden channel. I also want to be aware, though, what if we keep going higher? Can I buy as the market goes higher? Well, as you can see in the previous attempts, buying high doesn't work too well in range-bound markets. So we need to get very creative as far as the my two favorite breakout patterns up over that Nasdaq high. We'll talk about that tonight on the video. Then, of course, we'll wrap up tonight here on the gold. Gold is very, very interesting. As we mentioned last night, there's plenty of open space overhead for gold. We do think that gold has a mind of going back to that 1,500 here eventually. Maybe not tomorrow, maybe not even next Monday, but we do know gold here is rising higher back into a big old range from earlier on this year. So we know the goal is to be buying at support in a bull market, right? I think we can all see that, right? Bull market here. I want to find levels of support. Now, the easy one is to line up these highs, bring it down to that low, and as you can see, right, you can easily see that rotation back and forth. So obviously, that's going to be an easy area for us to start looking for a buy right now. But I'll tell you right now, if I hit it my way, I would use this triangle. Remember that range from yesterday? Well, the one cool thing about a triangle where 2 trend lines come together like that is where those 2 trend lines come together, that becomes a remarkable level of support in this case. And I'd love to see a nice deeper pullback down into that battle zone around that triangle. So we're definitely looking to be a buyer here on the gold right now. I'd like to see a pullback. As you can see, I've also marked up some ranges up here. You'll notice we got some double tops on this. There is a chance here we may go sideways. And of course, with that sideways range, I've got a pretty good plan for us here if it does want to turn into a range here as well. So we'll talk about all the details. If it goes range bound, if it pulls back, and heck, I'll even talk about my favorite reversal pattern, and I short this thing back down into that trading range from earlier on in the week. If you're a yellow metal trader like we are in our trade room, make sure you stick around to watch more on that. So we're ready to go here tonight. Nice big bull move on the gold, the Nasdaq, the S&P, and hoping to get a nice big bull move going back higher on the crude oil for tomorrow. Before we jump into the video tonight and really break this down into small bite-sized pieces, I just want to remind you guys to make sure you join our mailing list. All I need is your name, your email address, hit that subscribe now button, then check your email because I'm going to send you a welcome email with that verification link. I need you to go verify you got the right email, right, by checking that inbox. If you don't see the welcome email, check your spam folder. A lot of times, right, those emails get stuck in your spam folder. So make sure you join our mailing list, name, email address, hit that subscribe now button, then check your email, right? Check your email, and sometimes, again, that welcome email is in your spam folder. If you have any trouble finding it, give me a call here in the office, shoot me an email, right, or use that live support tool. I'd be happy to walk you through, right, getting registered and making sure you're on the list. And then also, how about some questions here tonight? You know, I always love answering the questions. Boy, you guys are always so great to post questions in the comment section below, especially if you're here for the first time today. Do you have any questions for us as we go through the video tonight? If you have any questions that I don't answer in the video, please definitely type those questions in. I'm always here to help, you know, kind of fill in the blanks and provide any more details that may not have been apparent in the video. So if you have any questions, drop those questions in the comment section below. And then I got a question for you too. What's the biggest obstacle standing between you and becoming confident and consistently profitable? Very important question for you. And feel free to wait on this until the end of the video tonight. But I want to hear from you guys and gals in the comment section, in your experience. And you could be a brand new trader, a veteran trader. What's the biggest thing standing between you and becoming confident and consistently profitable? Is it strategy? Is it mindset? Is it a good trade room? Is it a good coach? In your experience, what do you think is standing between you and achieving that confidence and consistent profitability? Drop me some comments in the comment section below, because I want to know what is important to you guys so I can go out and make this video better every week here on our newsletter. And then don't forget, guys, while you're down there in the comment section below, hit that thumbs up button for me, will ya? Always appreciate you guys tuning in every evening, and I really appreciate it when you hit that thumbs up button, because it helps to expose this video to all kinds of other traders who would love to learn this trading strategy. So especially if you're here for the first time, or if you tune in every evening on this video newsletter, hit that thumbs up button for me. Make sure you drop those questions in the comment section below. And then, as always, I'm always here to help. If you need any help along the way, don't be afraid to call that toll-free phone number. You know, I promise no phone, right? No call centers, right? No phone banks, no automated systems, just a small team here in the office here in Los Angeles, standing by to help answer all your questions and give you the information you need, so you're not wasting time and money by searching on Google. So call that toll-free phone number, hit that thumbs up button, drop me that question in the comment section below. And on that note, let's get this party rolling here this afternoon. Tomorrow, of course, it's Friday, the 15th of November. Tomorrow is a kind of a double witching, if you will. Tomorrow, third Friday of the month. First day was a Friday, so third Friday of the month, right, is tomorrow. We do have options expiring tomorrow that will not affect us too badly here. Only a double witching, right, for tomorrow's trading session. But it is a Friday, and a Friday means early in, early out. So we know tomorrow morning we got that Friday morning session, early in, early out. You've got to have a really good reason to be trading on a Friday morning after 11 o'clock Eastern time. My strategy on a Friday is I come in confident, optimistic, but disciplined. One of the most important things we have to do on a Friday morning is not undo all the hard work we put in this week. It's very, very common on a Friday when you're a few hours away from the weekend. Sometimes the price action is a little bit sluggish on a Friday. It can be very easy to unravel all the good discipline, all the good stuff you did all week. So like I said earlier, my strategy on a Friday is early in, early out. I'm always very optimistic. I'm always very confident, but I'm also very disciplined. I really want to make sure I follow my rules. You know, I always talk about the fact that as the day gets later, right? As the day gets later, you need to clamp down on those rules. You can be aggressive and loose with your trading rules early in the day or early in the week. But as you get later in the day, as you get later in the week, your mindset starts getting lazy, and you've really got to be proactive at staying disciplined. So tomorrow morning, that's my number one priority. Follow those rules. Don't get lazy with those rules. Don't let a Friday session unravel everything that we've worked so hard to achieve so far this week. So that's the mindset for tomorrow. Early in, early out, discipline on a Friday, right? Follow those rules. Finish what you started, right, with us in the trade room here this week. Then Big news tomorrow morning. Retail sales at 8:30, industrial production at 9:15. We got Mary Daly on Saturday, so nothing there for tomorrow afternoon. But as you can see, though, we got some big news reports tomorrow. Retail sales is always a big one at 8:30. And, of course, industrial production. Retail sales, I mean, really everything is affected by retail sales, but gold, Nasdaq, S&P, definitely going to be, when I think retail sales, I think Amazon, right? I think Walmart. Those are Nasdaq, obviously, S&P companies, right? And then, of course, when I think industrial production, I think about oil, right? I think about factories. I think about shipping. I think about heating and cooling. I think of energy, right, when I think of industrial production. So we're definitely looking at the gold, the Nasdaq, the S&P early in the morning, and, of course, later in the session, right, looking at crude oil. All of these markets will be affected by these two news reports, but those are the markets I'm really honing in for tomorrow. Those are the known knowns. We know those are scheduled for tomorrow. What we don't know for tomorrow is, will we hear more about trade? You know, we've seen we've going through that cycle, right? That kind of every other day cycle where it's good news, bad news, good news, bad news. Today we heard about trade and the fact that the Chinese negotiators are not exactly, well, from what we've heard, right, not exactly meeting the U.S. negotiators on what they agreed to before. So it does sound like there's a bit of turmoil, right, in that phase one deal. Everybody's trying to get that phase one deal on paper. We can get on with our lives and markets can get back to normal again. So hopefully tomorrow we'll hear some more about that. That might be a very welcome catalyst tomorrow morning in the morning session. We'll definitely be keeping our eyes on that. We're listening in for Brexit right now. We get impeachment stuff happening right now. There's a lot of things that are kind of under the surface out there that may show up tomorrow morning. Now, again, remember, we're not going to trade these news reports. We're going to be aware that they are potentially going to move these markets, and we'll trade the reaction, right? We're not trying to predict or trade the news reports. We're trading the reaction. So tomorrow morning, early in, early out, retail sales, industrial production, discipline, the right mindset for a Friday morning's trading session. And again, we'll have our antennas up tomorrow morning to hear if we're going to get any more headlines regarding trade, right, or whatever else may hit this market on a finally Friday trading session. So that's the plan for tomorrow. Tomorrow is all about mindset. Now let's prep the charts for tomorrow. As we mentioned, we got some oil, S&P, Nasdaq, and gold. Let's jump into the oil market here first. As I mentioned earlier on this week, we are watching rollover. And as I record this video tonight, just before the Globex opens in Asia, you can see here right now the 12.19 contract and the 120 contract are about half and half here right now. About sharing, you can see about 2/3, right, 1/3 of the volume there. So clearly right now we're going to be sticking to that, right, that higher volume market, that 12.19 contract. So crude oil will likely continue trading the 12.19 contract tomorrow. Tomorrow, what we might see tomorrow is we might see these balance out, right? 350, 350, 400, 400, you know what I mean? We may see them balance out. If they're very close, it won't really matter which one you trade, but be aware though, once that 120 contract has more volume than the 12.19 contract, we'll make the switch and we'll go trade that 120 contract instead. It looks like right now it will not be tomorrow. I would assume then on Monday. Monday, of course, is the actual rollover day, but as I mentioned earlier this week, we were anticipating it might be happening before we get there on Monday morning. So it does look like Monday is rollover, but be aware if you wake up tomorrow morning and the 120 contract is more than the 12.19 contract, we do want to make that switch over to the 120 contract. Now that we got that out of the way, as I mentioned in the introduction, we've got two big clues on this chart. One really big clue is that spike in channel. Spike in channels are notorious for pulling back into the deepest part, right? Into the deepest part of that channel. And we are right there right now. Spike in channel is a big clue on this. Another big clue is that trading range. Range-bound markets, think of a range-bound market like a balanced market, right? There's a big magnet right in the middle. Imagine that magnet now drawing that price back up into that trading range. Well, is that momentum going to stop right there? Probably not. It'll probably keep going, and that's what we like to use the pendulum swing. So we expect that magnet will draw the price back up into that range, and we're hoping it will keep going all the way through for a nice big runner target at that 57.80. So both of these clues are telling me I should be a buyer right now on crude oil. But there's one very big clue standing in my way, and that is that strong 1, 2, 3 reversal into that hidden channel pullback, right? The bears already got their momentum change. They've already got control of the market. The bears have control. I want to be a buyer now, basically in a bear market. It's a range market with a very strong bear momentum bias. So what's the best way to trade? What's the best way to buy in an overall, and again, it's a range market. It's not really a bear trending market. It's a range, but that real strong momentum is way too strong just to straight step in front of and buy in front of that freight train. So what's the best way to do it? I've got one very interesting pattern here I want to use here, and that's going to be called a crown reversal, right? Now watch how this ball bounces here. As we go lower, I'm anticipating that sellers will try to sell once, they'll try to sell twice, and if I can get those sellers to try twice off the moving average here, I want to see clearly two separate tries, one try and two try. I call this a crown reversal pattern. What happens is, because you've got all of this bearishness, we know the sellers are probably going to try to sell that pullback. And because it's so bearish, we know they're probably not going to just try once. They're going to probably try a couple times. And once those sellers try twice, then I can look to buy right into those stop losses, which is what I call a crown reversal, or a nested, right, failure pattern with a trap low below there, right? So nested failure, if we can get that trap, the trap makes it even better. If not, right, just that one try, two try, and that failure running back in. Now, we may not get that pattern. That pattern may not happen. So what if we just run back up into the range? Then what do we do? Well, if we run back into the range, now we want to stay out of that middle, right? We don't want to trade inside the middle of that range. What do we do if we go back into the range? We look to buy underneath the range, right? What's the best entry pattern to buy underneath the range? A two-try failure. We go one try for the bears, two try for the bears. Imagine a breakout pullback pattern, right? So imagine we go up, we're going sideways now, then we run lower. What's going to happen? The bears are going to try to take that as a breakout pullback and run that thing lower, right? Then, once they do, we can now buy right into those stops. Again, this is not a trending market. It's a range market right now. So we know that range is the magnet. Okay, if we can break free of that range, then I'll gladly call this a trending market. But for right now, though, if we end up back inside that range here in the short term and we end up sitting there sideways, I'm going to hope the market runs lower, because that's going to drag the moving average down. The rookie sellers, or the inexperienced sellers, I should say, will likely try to sell that breakout pullback. And when they do, the odds are not very good it continues. I'm looking to buy, going right back up into that trading range. Now, what if we don't stop inside that range? What if it keeps going, right? What if it just runs? Okay, there's two scenarios here to keep an eye on. One is a 1, 2, 3 reversal. This is the same idea we saw back here, right? 1, 2, 3 reversal. What you do is you mark up the lows up to the high and then sell off that high. Right? That would be the sell off that 1, 2, 3 reversal. Same thing. 1, 2, pull back to the moving average. 3, jump off of it. If we can see that strong move higher from there, now what I can do is I can mark up that trend line. I can find a hidden channel off of that major low, and I can look to buy the low of that hidden channel. Why? Because now that momentum is going to be going so strong at that point now. The odds of getting back up to get that pendulum swing are very, very good at that point. Now, we may not get the 1, 2, 3. We may get a strong move up, right? I mean, for all I know, something happens in Asia, the market runs higher. If we do get that run higher here, what's the plan then? I don't want to buy high. I want to be a buyer, but I want to buy high, though. What's the best plan now? The best plan is that two-try breakout pattern. One try for the bears, higher high, two try for the bears. And because we're worried about resistance overhead, I'm going to look for a trap low and look for that buy off that trap low. Again, this is called a two-try breakout pattern. It's a very simple pattern. The most important thing, though, is you got to get a strong move up. It's got to be a ripper, right? A real ripping higher here. And then we'll wait for those buyers to take some profit. We'll wait for those sellers to come in and sell high. Then we'll look for a chance to buy underneath that trap low. That will be the key. That'll be your key there to finishing off that pendulum swing and a retest of that 88 area. So now we know we've got a couple scenarios, right? One is going to be that crown reversal. One try, two try for the bears, then back up. Okay, the other, of course, is we go back into the range. We look for the 1, the 2, the failure pattern. Again, think breakout, pullback, failure, right? Breakout, pullback, failure. The third one would be that 1, 2, 3 reversal. This is obviously not going to scale, but again, 1, 2, 3, then buy off of that low, right? Why not just buy the first pullback? It makes sense, right? Why not buy the first pullback? Why not go up here, right, and just buy the first pullback? Well, first of all, you're buying right into the range, which is never going to be a very good risk-reward ratio, which means you're not going to get a lot of other traders who get excited about that area. The second thing is you've got all that bearishness, and there's a good chance this is nothing more than a trap high, and they'll run you right out. So again, we don't want to be a buyer down here, but all that bear momentum tells me I've got to be a little bit more conservative. Again, 1, 2, let the bears try twice. Let them wrap that rope right around their neck, and then we can buy into their stops. Or we've got to get a 1, 2, show me you mean it, and then we can find our new channel, and we can buy off of that low. Or it's that strong push up, 1 try, 2 try. Again, overhead resistance is a concern. Trap low is the best pattern to avoid buying into that overhead resistance. Now, what if we hold? What if they come back? I mean, you might be looking at this chart right now going, Joe, what are you talking about, man? This is a bear market. Put that hidden channel on there and sell the top of that channel, right? Now, that might work, right? They may get that. But again, there's too much information right now that says this is probably not the best place to be a seller right now. Now, where's our next area of support here? Let's take a look at this, because as you can see, it's not going to be easy to sell as this market goes down. We talked about this this week here. You can see where we are, right? This is big old range right there, and look where we go lower, right? All of this support, I mean, you can almost guarantee there are buyers waiting right underneath that low just to buy it right back up. So really, when it all comes down to it, even if they do hold this market going lower, right? Even if they do hold this thing going lower, I still really can't trust this until I see them hold another pullback, right? So if they do take this thing going lower here, I'm going to still be looking for that crown reversal pattern, right? I'm still looking for that move lower into a 1, 2, 3 reversal. I'm still looking to be a buyer down here, but if we do go lower, right? If we do go lower here and they go 1, 2, 3, thinking this is a breakout. Right? This is a range right here. So we're going to see some sort of breakout. If I can see a breakout go with that range, if I can see a strong move down, a pullback to the moving average, and I can see him actually hold that pullback and run, okay, now you convinced me. Now I'll be a seller on this. And this is one of those times where I'm perfectly willing to miss a sell setup right now to be able to avoid selling into what I think is a much larger trading range in the big picture here on the crude oil. So the moral of the story is, if you're trying to be a seller as the market goes lower, be very careful, because it does not look very likely here right now unless we can get a real strong breakdown, 1, 2, 3, get that momentum confirming, then we can look at a new channel. We can sell the top of that channel. We'll know more about this tomorrow in our trade room. Obviously, we'll do it together tomorrow. That way you don't have to go out there and do it all on your own. Oh, and by the way, speaking of doing it on your own, I've covered a lot of different patterns here so far, right? 2 try breakout, 1, 2, 3 reversal, nested failure, crown reversal. I want to go over all those patterns with you on our free trading course. I'll put a link in the upper right-hand corner. Grab that free course. It's a deeper dive into this entire trading strategy. You'll learn my 3-step strategy, the same strategy we use in our trade every morning. You'll learn my 4 favorite entry patterns, hundreds of examples of how we apply this strategy to our favorite markets. If you're brand new or you're here for the first time today, make sure you grab that free trading class. Follow that link in the upper right-hand corner, or I'll also have it linked up in the description of the YouTube video. If you're on the blog right now at Sideways Markets, there's a big red button for you guys right below the video tonight on our trading blog. Whatever you do though, grab that free course, learn the strategy. That way you and I can get more working together every evening on this video newsletter. In the meantime, let's keep this party rolling here. Over to the S&P right now. S&P is in a similar situation to oil. We obviously have a bull market right now on the S&P, but we're in a very difficult spot here to be buying, aren't we? Yeah, not exactly the best place to be buying. The most important thing we see right now, kind of zoom this thing out a little bit here. Okay, this is, of course, the same thing for the Nasdaq as well. We have this big channel, right? This big old channel. And we've been watching this all week. We've been talking about this channel and trying to get us up to a retest of that high. So we know that big channel puts us up around that 3105, right? 3106 area as well. We also know that from last week, we had that strong first leg up, right, as you went into the holiday. And then, of course, we came out of it, right, with that big measured move. That measured move also puts us in that same spot, that 3106. And then on top of that, there's a lot on this chart. I know there is. I apologize about that. But on top of that, we also have a bull market into a range, you can see. Okay, that range is so important. In fact, I would say anytime we have a range on the chart, the range is the most important factor. Now, ranges are so packed with useful information because, first of all, right, we can take that pendulum swing, the amount of the move below, the amount of the move above, okay, pendulum swing right around the same spot. But you might also notice, too, that I'm drawing trend lines. And I'm creating these, what's called like an expanding triangle, right? And see how the mark keeps bouncing off those levels here? Where's that put us? Surprise! Right back up to that 3106. So as you can see, we have a pretty good idea of where this market wants to go. The problem is we do not want to be buying into the highs of this range because, as you can see, right, buying high just simply isn't a very reliable strategy in a range-bound market, just like trying to sell low is not a very reliable strategy. You know, as I mentioned last night on the newsletter, right now these range-bound markets tell us whatever you do, do not buy high and do not sell low, do the opposite. And I realize that goes against our instincts, but welcome to the business of trading. Trading goes against everything we feel in our gut, right? When in fact, always an ongoing joke in our trade room, right? Whatever your gut instinct tells you to do, you probably want to do the opposite, right? Until you got about 15 years to develop those instincts, right? Instincts do happen, but they take a while to develop those instincts, right? That sixth sense that people get about the financial markets or anything they have an intimate relationship with. So we know the buyers, right? We know where they want to go. We know this is not a very good location to be buying. So where would be a good location to be buying? Well, a lot like we talked about on oil, if we have a range on the chart, where are 2 easy spots to be a buyer? One would be underneath the range, clearly, right? That would be ideal, wouldn't it? Yes, that would definitely be ideal, buying underneath the range. And then what if the market goes higher here? If the market goes higher, we know we've got a bunch of resistance up there. So as we go higher, do we hold with a 1, 2, 3 breakout? Do we keep running with a 2-try breakout, see what I'm saying? Or do we go up and start going sideways up there? If we can get up there and go sideways up there, I wouldn't be opposed to that at all. That would actually make our job even easier. Because then, again, those ranges give you so much valuable information. Yeah, I know they're a bit confusing sometimes when you're a rookie, but once you learn to embrace these ranges, they really begin to unlock a lot of key levels of support and resistance, and they tell you where to look for those buy and sell setups. So we know we want to be a buyer. Let's talk about the first one, right? How do we buy underneath the range here, right? How do we buy underneath that range? The hardest part about ranges is staying out of the middle. It is, right? It's always difficult. So for example, if I draw a trend line off these highs, up to that low, and we pull back now to that, right, to that channel here, this is going to be a real tough trade to take. It'll put me right inside the range. You see that, right? Why is that so hard? Because look, everything else gets all chopped up inside that range. So what I really want to do is I really want to try to, let's get rid of that one. Let's go out and let's put this trend line right there. That's a much more useful trend line. You notice what I did? I almost want to ignore that larger channel, right? Almost want to ignore it because it's not going to give me a lot to work with here. So now what I will do is let's try to use that trend line. Let's get a pullback here, right? Again, get underneath that range. That will bring the moving average over. We then wait for those sellers to try to sell off the moving average. Again, it's not a bear market at all, right? It's a range market. What does the range tell us? Buy low, sell high, use the range as the magnet. Once we see it pull back to that trend line, look for those bears to commit off the moving average, and we're buying into those stop losses. Now at this point, we're probably not going to have enough space there to buy that pullback, but this is a very classic failure pattern. You'll see one right here. Over the left, right, we make a run lower. We pull back to the moving average. They fail, right, and the market runs up into a pullback. That pullback probably wouldn't be the best trade inside the range, but again, you can hopefully see the similarities in what I'm drawing out here right now. Again, the hardest part is going to be if this pattern sets up inside the range. We simply don't want to take those trades inside the range. So if I'm going to pull back to the trend line, I'm looking for basically a failure into pullback combination, right? Failure, a seller failure into a pullback combination. Now, what if we go all the way back down, right? Anytime we see a real strong move down, have we broken free of the range yet? No, because what's a breakout look like? A breakout would be a strong move down. It would hold that pullback, right? And then jump off the moving average. That would be a breakout. And then at that point, I could look for a 1, 2, 3 breakout, mark up that low, mark up that high now, and I can sell right off the high of that hidden channel. But again, that requires a very deep pullback, and then they've got to hold that pullback. They've got to hold the moving average pullback. We see strong moves all the time that can't hold the pullback, and they run right back up into the range. Now, that was pretty dramatic, obviously, today. But again, if we do make that big, strong run down, don't be so convinced about this being a bear market, right? They've got to hold that pullback and run it to really get everybody on board. Okay, what I'll be looking for, if we don't get that, is that nested failure, right? Let them try once, let them try twice, and go from there. It'd be nice if this trend line could be used. Right? You'll see a lot of times that the sellers in this case, they'll try to sell off the underbelly, if you will, of that trend line. And now you know where the stops are, right? You know where the pain point is. And that's what we're looking for, right? We're trying to buy now right into those pain points of those counter trend or breakout sellers. Remember, guys, there are lots of traders out there, rookie traders and experienced traders who don't trade with a plan. They've got no coach. They've got no one hold them accountable. They've got no written rules. They're trading on instinct, right? People who are trading on instinct, they get roped into these types of breakout patterns all the time. They see a breakout move down, and they say, oh my goodness, look at that strength. I'm going to sell that pullback. They try once, they try twice, and it slips right and runs right back up into that range. Don't be the rookie on that, or don't be the inexperienced trader on that. Understand the range is right. You're right underneath that range. I want to buy back up into that range here again, using now the opposite side of the range as my target. And again, the pendulum swing again, right, for your runner. Now, that's the easy stuff, the pullbacks as we go. And keep in mind, too, guys and gals, that if we do end up back inside this range again, we don't do nothing, right? We don't do anything, I should say, inside of that range. We sit on hands, and what do? We wait for a breakout failure. We wait for a breakdown. We wait for that moving average coming over. The bears will come in and try to sell off of it, and we're looking to buy right into those stop losses. Same plan as always. Again, make sure you avoid the middle of that range. Now, as we go higher, it's very, very important you understand that we've been flirting with these highs for quite some time. right? Been flirting with these highs for quite some time. This is nothing new here around this, 3,100 area, big round number. So we know where the market wants to go. The problem we have right now is how do we buy as we buy up into these highs, right? We know we've got some range resistance. Okay, remember, this is the range itself. We take that trading range, we use that to find our levels of resistance. Then again, that 3102, right? That's our previous all-time high. That will also be an area of resistance. Anytime I have a situation where I want to buy, but I'm worried about buying high, the most reliable setup is always going to be a trap pattern. So for example, one very easy to trade example here would be we keep running higher, we get that 2-try breakout. 1 try for the bears, 2 try for the bears. Again, remember, this is all assuming it's a very strong move higher, very strong move up. Right? So we open up in Asia, we make a good run higher, 1 try for the bears, 2 try for the bears, before we complete the pendulum swing, before we complete the measured move, before we get up right to that big resistance overhead, 1 try, 2 try, 2 try breakout pattern. That will be the one you really want to watch for. Again, it's got that strong push to begin the move here. The second pattern is going to be this 1, 2, 3 breakout. If we can pull back and hold this thing, I have no problem now looking for that channel and buying off the low of that channel, as long as what? What's the one caveat? What's the one variable? We've got to get in before we get up to reach that pendulum swing. Okay, so both of those 2 breakout patterns, you've got to get in before you get there. Okay, why? Because oftentimes what happens is when you get there, the market will now start going sideways. If we do stick up here, right? If we run up to that pendulum swing, we stick and we start going sideways, what happens next? The market now starts to adapt to higher prices, right? The longer we stay here, the more the markets are accepting the price that we are. The longer we stay up higher, the more we accept that higher price, right? It's pretty simple, right? The more people buy it up there, the more people accept that price. So with that price acceptance, as we always say, now we know the market's bullish. We're back into a range. I'm going to use that range to find my buy zone. Like I said earlier, those ranges are really powerful stuff. Once we know where that buy zone is, now we look for that 2-try breakout failure pattern. We look for the 1 try for the bears, the 2 try for the bears, and we take it right back up again. Now, oftentimes what happens is this market will run up, it'll pull back, the moving average will come over. We'll see a nice failure pattern for a snap back to retest the high, right? A nice little seller failure, a snap back to retest the high, and then it will pull back again. And that will create your range. Make sense? Once you see that range, focus on buying underneath. 1, 2, and up from there we go. Now we're talking. Right, now we're talking. We've got you guys locked and loaded here for the S&P. And again, I love the S&P. We got hundreds of examples of that 3-step strategy, my favorite markets, my favorite setups on the S&P. Grab that free course in the upper right-hand corner, or it's in the description of the YouTube video. Let's keep going here now. Over to the Nasdaq here tonight. Nasdaq's in a very familiar place here. We finished up yesterday's session, didn't we? We did. We finished up yesterday morning session right inside that, or yesterday evening, right inside that range. Look where we are right now, right back to where we are. If that doesn't tell you this is a range market, I don't know what does. In fact, you could go one step further, one more day. Right? Look at that. The last 3 days, almost last 4 days, have all closed at the same price. Right? Closing here, closing here, closing here. What does that tell you? It tells you this is one big range. Now again, range-bound markets, as long as you understand the pros and cons or the best ways to trade them, they're not very difficult markets to trade. The key is just knowing, stay away from the middle. Don't buy high, don't sell low, do the opposite, right? Buy low and sell high. So we know that a range is a balanced market, right? Ranges are balanced. Imagine there's a big magnet right in the middle of that range. What goes down comes back up. What goes up comes right back down again. Now again, right, we know the market is very bullish here, like on the S&P. So as far as being a seller as we go higher, how would you, by the way, right? How would you want to sell this market as it goes higher? You would need to get that crown reversal. 1 try for the bulls, 2 try for the bulls. And again, because you're going against the momentum of this market right now, you're going to really want to make sure those buyers try once, try twice, and then most important, right? Most important, that trap and sell it back down from there, right? Those will take some time to learn. They're a little more complicated patterns because they require 1, 2, trap and go, but that's the most reliable way you're ever going to trade a reversal. Okay, most reversals are not going to succeed. Most reversals will fail. It's very difficult to predict a reversal, which is why I wait for this advanced reversal pattern. Now, a lot of this is very similar on the Nasdaq to the S&P. We know we're bullish. We're inside that range. I'd like to be a buyer underneath that range, right? That'd be ideal. I'd like to use that pendulum swing for our big old targets up there, 83.15. I've also, as you can see here, drawn out my triangle. And over the past few months, these triangles have really been hot stuff. They really have. They've been really, really reliable. So when I look at this right now, I can easily see we're rotating. We should be able to get right back up around that big round number as we go. So I definitely think that round number is achievable here for the buyers, but they've got to show up though right now. They've got to put something together here that we can be a buyer on. So really there's really 2 different spots, right? 1 is we pull back. 2 is we keep going higher. Third one, of course, will be we get stuck inside the range. If we get stuck inside this range, we don't do anything, right? We sit on hands. If we sit inside the range, we sit on hands. We wait for the 1, the 2, and we buy back up. Again, if we're sitting inside the range, what is that? That is a vote for acceptance, right? If we sit inside that range, the longer we stay there, the more evidence is piling up that in this case, the buyers and sellers like this area. If they didn't like this area, they would not be there right now, right? That's what we always say. The price is the truth. The markets are always right. They can't be wrong. The markets are always right because wherever the buyers and sellers agree on is the correct price, right? Whether our opinions are different than that or not. So if we sit here for a while inside of that trading range, we have acceptance. They keep on accepting that price in that, right? In the market at that price. If it goes lower, what's going to happen? We're going to probably see that moving average come down. The sellers, again, these are the inexperienced traders who are not paying attention, right? They'll come out and try to sell that pullback, knowing that we've been confirming this price is higher all morning. At that point, we know where the stops are, and we're buying into those stops. Now, you might be wondering right now, why don't we just buy it right down here? Why not buy down there? Well, don't be naive. You don't know how far it'll keep going, right? Sometimes we see a move like this, where it runs lower, and do you buy there? Do you buy there? Do you buy there? What I like to do is I like to wait for it to go lower, wait for it to pull back to the moving average, see some evidence of bears coming in. At that point now, we know we've got the fuel we need to run this thing back into the range, right? So let this thing pull back. Don't be foolish. Don't try to pick the bottom on this. That's a fool's game. Wait for the bears to come in and commit off the moving average, because now I put my buy order right here above those highs. And if I'm wrong, sure, the mark goes lower, I'm fine. Right? You're not fully committing to that buy until you see that seller come in and try to sell off that pullback. Now you know right where their stops are, where their pain points are, and then you can buy right into that pain point. Okay, now we saw a great example today of that strong move down. If we see a real strong move lower again, like the Nasdaq's been doing a lot lately, don't forget, use the nested failure. 1 try for the bears, 2 try for the bears, and then back up from there. Make sure that's coming off the moving average, of course. So if we do see a strong move down here, moving average comes over, 1 try for the bears, 2 try for the bears, and up from there. So how do you know which pattern to use? It all depends on momentum. If we see a relatively shallow pullback into this first battle zone, now what I'll do is I'll look for your straight failure into pullback combination. Failure into pullback, right, combination. And again, make sure that pullback pattern's not inside the range. But if we really get clobbered, now it's a 1, a 2, and back up from there. All right, guys, we call it a nested failure as opposed to a regular failure. A nested failure has a failure inside of a failure. That's what we call it, a nested pattern. Okay, so now into the plan here. If it pulls back on us, what if it goes higher here? If it goes higher, I would imagine that trend line combined with that big round number is going to be major resistance. So as we go higher here, it's going to be up, strong move up, 1 try, 2 try, trap low, and go. Okay, that's one pattern. You've got to get that before we get up to that round number, right? Before we get up to the top of that range. Or it's a 1, 2, 3 breakout. Mark up that high, mark up that low. Again, we're buying it before we get up to the high up there. Or maybe it might just run up and it might go sideways up here, right? That might happen too. We may run right up, get right back to the all-time high, 8,300, and go sideways. Now, most of the time, those ranges, as they get pinned to those highs, will find our level of support, look for that 1, that 2, and buy back up from there, right? Let that breakout pullback for the bears fail. Way too bullish to be trying to be a seller on this, and we'll buy underneath that range. You know, again, though, that range will take it'll take about an hour or so, probably overnight, to start to form, and then you'll be able to plot that buy underneath that trading range. All right, guys. So good stuff there on the Nasdaq. Nasdaq looks pretty good here. We got the buy side. The sell side's pretty easy, right? Just a 1, 2, 3 reversal. Strong move down. Find my channel. Sell off that channel high. That's a pretty easy one, I think, right? Now that you guys know what a 1, 2, 3 breakout looks like. Okay, and again, right, watch that pullback to be a buyer as we go back into that range. Last but not least here, over on the gold tonight. Gold's got really two big, well, I guess 3 factors here right now on the gold. The first factor is this channel, right, this spiking channel. Now, this is a spiking channel. We talked about spiking channels earlier on the oil. What do we know about spiking channels? They love to get these deep, deep pullbacks. So don't be surprised if gold really takes a nosedive, right, and really pulls back here for us. Do not be surprised about that tomorrow at all. And the news media will tell you it's something to do with some headline, right? You know, the news came out and sent the price lower, and then, some other news came out and sent the price higher. Don't let the news media fool you into thinking these charts weren't telling you what to do the entire time. I always kind of laugh a bit when I turn on CNBC, like, you know, this headline did this, and then this did that, and I'm like, it's a spiking channel, right? We simply pulled back and the buyers bought it. There's no real fundamental overlay on this whatsoever, right? It's a technical pattern. So don't let the news media, the television shows, right, make it sound like you've got to watch all these different fundamentals, because if you just check the chart, just trade the chart. The chart will tell you way too high, too low, right, or what the plan will be. That's the first big clue right there, is that spiking channel. So you can have a good laugh right along with me here tomorrow when they talk about how some news report sent the market lower, and then later in the day, right, investor sentiment sends it back higher. No, it's not. It's called a spiking channel pattern. Get with it, right? So we know we got a spiking channel. The second big clue here is that run lower, right, back up, that triangle. Remember that triangle from yesterday? Triangles are really, really powerful. Well, they're ranges. And as I always say, ranges are really powerful tools, because where you put that kind of vertex in, right, the combination of that triangle at 1464.1, that is a beautiful spot to be a buyer as well. Okay, so this whole area down here is really ripe for the pickings. My big thing, though, is the third clue is this possible range. We got double tops, okay, not perfect, because we don't need perfect double tops. We don't need perfect. We need close. That's all we really need. In my eyes, that is a double top. Mark the lowest point between those two lows. That becomes my range. Now, what does the range tell me here? Buy low. Buy underneath that trading range. This is a bull bias, right? It's a bull bias on range and on gold. And so we know that as we go into that range, I want to be a buyer, right, as we go. In all reality, I can buy with a failure underneath that range. Or I could also use those range breakouts, right? The 2-try breakout, and of course the 1, 2, 3 breakout as we go. So real quick here, let's play the worst case scenario, right? Worst case scenario is we get crushed, right? Something happens overnight. We have this big, deep pullback all the way down into that spiking channel battle zone, right? All the way down here. Again, the base, right? The base of that channel. Okay, I don't anticipate this, but it may. I mean, obviously anything can happen, right? With the trade deal with China right now on the rocks a little bit, this could get pretty interesting. So if we do get that real strong slice lower, What do? Do you just buy it? No, because they may hold that pullback. For all I know, the bears will come in and hold that pullback and run it. So you don't want to buy too aggressively here. If we really get crushed and pull back, let those sellers wrap the rope right around. Let them prove it to you that they're committed, right? Show me once, show me twice, and I can buy back up from there. Again, we call this a nested failure pattern, right? It's a failure inside of a failure. And again, what we're doing is we're simply looking to buy now into where the pain point is for those sellers. And oftentimes what happens is those markets, they'll pull back nice and strong. Moving average comes over, right? The bears try once. The bears try twice. You get this really strong push off that second try. But now you know exactly where those stops are, right? And now we can buy right into those stops. And if we get lucky, get that pullback. Sometimes on these really deep pullbacks, that pullback pattern won't happen. Right? What happens is it'll go running higher like this. It'll run higher like that. It won't pull back. If it runs higher, grab a trap. Okay? If it runs higher with a pullback, grab a trap pattern there. So again, this is a failure pattern. It's a nested failure. Strong move down into that big buy zone. Bears try once, bears try twice. Yeah, now we know you're committed. Now we know that rope is wrapped around your neck. And now we're going to buy right into your pain point. Because those sellers, when they get stopped out, they have no choice but to buy their way out. There's only one way out of the market. That's to be a seller, right? That's to be a buyer, right? If you're short, only way out to be a buyer. So buyers come in. Buyers are everywhere now. Buyers are buying low. The sellers are now buyers, the buyers are buyers, and oftentimes that market slams higher here with a short covering rally. If that's the case, we know where the target is. The target is always back to retest the high, which is why once we get closer to that target, we don't want to chase after it. We're looking for what? Traps. Traps are always the best pattern to avoid what? Buying into resistance. Anytime I find myself buying high, anytime I find myself where I'm concerned about overhead resistance, top of the range, I want to use those trap patterns. So that's a really easy scenario. It's a little more advanced because obviously we do have to wait for that strong move down, 1, 2, and then go from there. But again, pretty easy pattern overall. How about that triangle? The triangle is the one I really hope we get tomorrow because hopefully we'll get that move down into that triangle area. At this point now, momentum won't be too scary. At this point now, we can now look for those bears to come in to sell off that moving average. Mark up those stops, buy into those stops, and again, hopefully get that pullback before we go back up into that trading range. Okay, a little bit shallow of a pullback, right? Less momentum for the bears, more aggressive for the bulls. Makes sense, doesn't it? Hopefully it does. And if it doesn't make sense, drop me some comments in the comment section below, right? Let me know that you're still watching right now. Let me know that you need more clarity on this stuff, and I'll put together more lessons for you, right, in previous videos. Remember, I can only help on what I know you need help with. So any of this stuff doesn't make sense, type those questions in the comment section below. And while you're down there, hit that thumbs up button for me, because if you're watching this video right now, almost an hour into this video right now, you're in that elite 1% club of finishers, not just starters. So again, those are our 4 different patterns on the pullback right now. If we go sideways here, and we sit inside this range going sideways, remember, the longer we stay up there, the more acceptance we get. Wait for that move lower, get that moving average coming down, right? Again, sell off that pullback failure and back up, in we go. Not much different there. Now, one thing you do want to keep in mind too is what if we go sideways here in the Asian session, the overnight session, right? And then all of a sudden something happens and the market breaks out. What type of breakout pattern do we need here? Well, this is where we go back to those 2 breakout patterns about earlier, right? One is the 1, 2, 3 breakout. 1, 2, 3 breakout. And I know this is a very conservative breakout, but you have to be conservative, right? Most breakouts will fail, even breakouts going with the trend. Okay, and there's no amount of special indicators you can use to filter breakouts. Trust me, I'm pretty sure I could write the book on how to lose money trying to trade breakouts, right? I spent the first 3.5 years of my career obsessed with filtering breakouts, with order flow, momentum divergence. I'll save you a bunch of time and money. Avoid breakouts. In range-bound markets, breakouts are unreliable. Never trust a breakout in a range-bound market. Now, Once I get that 1, 2, 3 breakout, then we go out, mark the high, you got it, mark the low, and now we're buying off that low, right? That's our 1, 2, 3 breakout. 1, 2, 3, and then buying the low of that channel. Or we go jumping, right? 1 try for the bears, 2 try for the bears. We're very high on the chart right now, so I do want to make sure I'm getting a trap low, right? And then where's our targets up here? Where are we trying to get to? Where is the next big objective? Well, I would imagine that there's kind of the gatekeeper right here. That's the gatekeeper right there, 1483.1. If they can get and stay above 83.1, again, I've been talking about this all week here. I would be surprised if we get there tomorrow, but 1500 now is wide open. If they can just get through that 83.1 area, right, that'll put us now into the underbelly of that range. And once we're in the underbelly of the range, we'll get sucked right back to the side of the range there. Okay, and it might even go even further there. So, I don't want to say we're I don't want to make a call of 1500 just yet, but you can definitely tell, though, if we can get a big breakout higher here, there's plenty of space overhead, right, if we can get this thing to go. So, again, 1, 2, 3 breakout, mark the high, mark the low, buy off that low, or strong move up, 1, 2, trap, and go. And also, too, there's no reason why we might not see one of these where it pulls back, we get that failure, it runs higher, and then we pull another one of these things today where we see tomorrow morning, mid-morning, we're going sideways up here, and by just before lunchtime, 1, 2, buying it right back up, right? Pretty much what happened today, right? Big move up into that range, 1, 2, back up we go. Wouldn't surprise me at all. All right, guys? Remember, stick to the direction of the momentum. Right now, we're bullish. If you want to be a seller, look for the crown reversal patterns, but do not make it a habit. Okay, your number one pattern, when you look back at your trades tomorrow afternoon, like I always recommend, go back over all your trades for the week. The majority of your trades, the vast majority of those trades should be going with the trend, and they should all be off of support or resistance. One of the biggest tweaks I help my clients make is to make sure they're always either buying off support or selling off resistance. In fact, I would say that is the most unsung hero for most new traders. Once I get my hands on those on my clients and I really hold them accountable to buy at support or sell at resistance, it's amazing how quickly those winning percentages go up. So if you're not with me tomorrow morning, again, tomorrow morning in our trade room, 8 o'clock Eastern time, I'm going to hold you guys accountable, following that trend, buying at support, selling at resistance, avoiding all these rookie traps. If I'm not here with you tomorrow, or if you're not with me in the trade room tomorrow morning, remember that simple rule. Make sure when you're buying, it's in a bull market at a level of support. You'll be amazed how difficult that really is. It's much easier said than done. Yeah. Buy at support, sell at resistance. But in reality, it's actually a lot more difficult as it sounds. So focus. Again, tomorrow is all about discipline. Last but not least, guys, don't forget tomorrow morning, it's easy to come out and join me tomorrow morning and every morning in our trade room. Get registered as a brand new advanced member. You can register on our website at schooloftrade.com. If you're on YouTube right now, I'll put all the links for you in the description of the YouTube video. If you're on the blog right now at Sideways Markets, all the buttons are below the video tonight on the trading blog. And as always, don't forget, call me if you have any questions along the way. Use that toll-free phone number just to the right of my ugly mug. As always, I got live support here if you guys need help along the way. And again, if membership is not quite right for you right now, that sounds great. Make sure you grab that free trial, though. Learn the strategy. That way you and I can make the most of our time together every evening on this video newsletter. So enjoy the free course. I'll see you guys tomorrow in the trade room at 8 o'clock Eastern time. If not, I'll see you guys first day of next week, right? Monday next week. Got a short week next week with the very exciting Thanksgiving holiday coming on Thursday and Friday. We'll talk about the Thanksgiving schedule for next week. We'll talk about that next week. In the meantime, discipline tomorrow. We'll see you guys tomorrow morning at the opening bell. If not, come back and see us again next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.